What's up? My name is Jack Routledge. I'm a former banker, mutual fund salesperson, and loans officer. I'm here to talk to you about money, what the banks don't want you to know, all that jazz. Hit that subscribe button, comment, like on the video, helps the algorithm out. I have an Instagram and a TikTok where I try to post videos every day with little clips either about the video that I made or something else that comes to my mind about money. So go follow me on those platforms. Link is down in the below and you can see it right there as well. Today we're here to talk about debit cards versus credit cards. So both have positives and negatives. I don't really believe that one's better than the other. They're just kind of designed for different individuals. So keep that in mind. One might work better for you than the other one. So let's dig into some of the details between each, benefits, pros, cons, and we will hopefully figure out what works best for you by the end of the video. So with a debit card, you're only spending money that you have. It comes directly out of your bank account. So you can't rack up any credit to pay off in the end that you don't have enough money for. You've got no bills to keep track of, no debt to pay off. One of the downsides though is that if you are a victim of fraud, then you lose your money directly. You have to wait for the bank to reimburse your money. Whereas with a credit card, you're losing Visa or MasterCard's money versus your own in a fraud situation. Other perks depend on the type of card, so things like travel perks, insurances, cashback, other benefits, low interest, those kind of things are all card dependent, and we'll get into that here as well. The biggest downside to a credit card is if you're unable to manage a personal credit line, then you're just paying interest for the privilege of spending Visa or MasterCard's money, which is also not a very good idea. So you're not wanting to carry a balance if you have a credit card. That's one of the big things. The other thing too is that annual fees can be quite expensive depending on the card. So on the debit card side, personally, I use a debit card for most of my transactions. I just find it simpler. I don't like having a bill come at the end of the month to pay off. I like to just make my charge, have it come home directly out of my account and my budget, and then that's just taken care of. Another benefit, there's no annual fee to spend your money. You can just spend your money. You don't have to pay a fee to maintain a debit card. Most banks now even have Visa debit cards in Canada, so you're able to set up recurring bill payments, make purchases online, purchases over the phone using your debit card. You don't have to have a credit card for a lot of those things anymore either, which is really nice. RBC, for example, too, even has their Vantage checking account. So it's a checking account that lets you load offers and get cash back and rewards on certain purchases through their online banking platform when you use your debit card for those purchases. So you don't even need now to have a credit card to get financial incentive from your bank to spend money. Debit cards are immensely popular here in Canada as well. I did a little bit of research and 57% of daily transactions in Canada that are electronic are done with debit cards. So actually, credit cards are less popular here compared to the States. We really like our debit cards here. Chip and PIN is also making debit cards more secure, harder to hack, which is good, and harder to steal your money. There is Tap, which does allow you to spend, I believe, up to $100 every couple transactions just by tapping your card to it. But obviously, there's a dollar limit how much you can spend and how often you can do it in a business day as well to help cut back on that fraud. The best thing about a debit card, it's basically a digital cash alternative if you're kind of into that sort of thing. It's a great way to spend your own money without having to carry around a big wad of cash in your pocket, which is safer. When I used to work at the bank, we used to try to discourage people from taking large amounts of cash. There's a couple of reasons for that. One was just general cash management procedures that most modern bank branches have, but also it is dangerous to walk out the door with $10,000 in cash. As soon as you're out that door, if you get jumped by someone standing outside the bank, there's nothing we can do about it when you have that in your pockets. Just keep that in mind there as well. But like I said before, with a debit card, the biggest downside is fraud protection. So something happens if your card does get skimmed and you don't notice before a transaction goes through, then you are losing your money. It happened to me once. I had my online banking hacked. I lost about $500. Luckily, they were very quick in returning it to me, but definitely it sucked to not have that money in my account. Whereas had I been using a credit card, the way that would have happened, maybe they would have took Visa or MasterCard's money instead. So that is one thing to keep in mind when using a debit card. So we're taking a look at credit cards. There's a vast number of options out on the market here. Everything from your regular cards, low interest, premium cards, secured cards, super high-end cards for affluent clients. Some cards have no annual fees, some cards have really high annual fees, some have interest rates at 22.99%, some have interest rates at 19.99%, some are down in the 13s, some will be zero depending on the program that you're in. So there's a ton of different ways that credit cards, points, and programs work. So I'm gonna kind of run through some of those here. So in Canada, all the big banks, credit unions, large financial companies pretty much all offer credit cards. They're very popular here, as I said before. So to qualify for most cards, you need to make about $15,000 a year. Most aren't really income tested truthfully. It's mostly just an attestation. But obviously if you're going in to get an Amex Platinum card and you're a student, they may look at you a little bit weird for that one. Your premium cards, so your Visa Infinites and your World MasterCards, are about $60,000 a year income or $100,000 household for that. And then if you're into your very high-end cards like your Visa Infinite Privileges, usually those have a $200,000 household income to qualify for as well there. So cashback, will give you a percent back of the money you spend. It's usually based on categories. So categories are things like restaurants, grocery stores, gas stations. All of these places may have different promotional rates on them. So say, a card might incentivize 3% cash back on a restaurant versus a standard earn 1% back on your everyday purchases. So they're incentivizing that category. So you spend a lot of money at a restaurant, it might make sense to pick that card over a different one. Usually an entry-level card, that $15,000 a year per year income card, is going to help you pay for, 1 or 2 flights a year kind of thing, maybe in addition to your vacation, but you're not reaping massive benefits from them since you're not paying for the card in any way usually. Premium cards like your Visa Infinite, your World MasterCards, the ones you need to pay $60,000 a year for, those are the kind of cards that will get you a free flight, once or twice a year. They may even pay for a vacation if you spend a lot of money on them there as well. There's business options for some of those cards too that can get you some pretty nice rewards. So that's something to look into if you're a business owner. Usually get other promotions through Infinite cards as well. I know Visa Infinite has the dinner and hotel program, so they put together special packages you can purchase to go sit down at a restaurant and eat a curated meal and then stay at a fancy hotel through their programs. They also usually offer travel insurance, free check bags, lounge access. I know the CIBC Aventura Infinite card will offer you free rebate on a Nexus application for crossing the border quickly between Canada and the United States, which is very nice if you're a frequent traveler. The Amex Gold card would probably fit into this category here as well, but Amex penetration is not super high in Canada, and there is still a disproportionate amount of businesses that don't accept Amex. It's getting better, but because the fees are so expensive for accepting Amex here, not as many businesses will accept it as Interact, which is our debit network, or Visa or MasterCard, so just keep that in mind if you do have an Amex card. There's also low rate cards out there that offer no annual fee and a low rate in exchange for having no rewards program on them. Often these kind of cards have a balance transfer offer on them too. So if you have a credit card balance on a different card and you transfer it over, they'll usually be a promotional period of 0 or 1 or 2 or 3% interest for a small fee to transfer that balance over. This is great if you have credit card debt that you can't consolidate into a different type of low interest product. But again, I wouldn't even use a credit card if you don't think you can manage a revolving credit line. The little bit of rewards you get is not a payoff for the amount of interest that you pay when you carry a balance on a card. Secured cards, I'll touch on these quickly here as well. Secured cards are a great way to rebuild your credit if you've had some issues in the past, whether that's bankruptcy or just generally not great credit. What a secured card is basically whatever the credit limit is, you put up either 100 to 120% of that balance. So say your credit limit's $500, you give the bank 500 to 120% of 500 to basically secure that credit limit for you, and they hold that on deposit in exchange for extending that credit to you. Eventually they will probably convert your card to an unsecured card, give you your money back, and if you rack up the card and don't pay it, then they take your cash and use that to pay the balance. So secured cards are great, but again, if you found yourself in a situation where you've gone through a bankruptcy, unless it was related to something that had nothing to do with revolving credit lines, I would just stay away from credit cards personally. Speaking of interest and racking up balances, again, most credit cards in Canada have an interest rate of 22% on them. So this does add up very quickly. It doesn't take very many months of having interest charged on your credit card for your payments to basically become all interest. I've seen ones where even $1,000 credit balance, if you look at your bill, if you're paying just a minimum payment, it might tell you that it's going to take you 2-3 years to pay off that $1,000 balance. That's much interest you're paying. So they're great for day-to-day purchases, but don't carry a balance on them. It's going to cost you a ton of money, way more than you can benefit from the rewards points that will be paid to you. If you just want to use your card for 1 or 2 purchases a month, you want to build up your credit a little bit, get a trade line on there, I would recommend just a simple low interest or no annual fee card. If you're one of those people who wants to use their credit card as much as they can, rack up points, again, I would definitely recommend it if you have the ability to keep that within your budget and not spend the cash in your bank account so you can pay that bill when you get it. But if you can't manage that, don't do it. It's not worth it. I've said that a lot this video. I'll also quickly manage cash. Cash is great if you really like to kind of feel that money in your hand. You can budget with envelopes using cash, which is also really nice. You can visualize your budget better than doing it on a spreadsheet or something like that. It also allows you to pay for things discreetly. That said, I'm not a very big cash guy. I don't even carry around a full wallet. I just carry a card holder. I don't really like cash. If anyone gives me cash, I would rather them e-transfer me, or I will just immediately go to the bank to deposit it. I don't really like it personally, but some people do, so to each their own. So in conclusion, just use your debit card if you have any issues paying off a revolving credit balance at all. It's not worth it. Again, I've said this 1,000 times, I'm gonna sound like a broken record. Don't pay credit card interest just to have a credit card. You don't need one. It's not a huge deal. There's very, very few things that you can do only with a credit card. If I had to name off, it's much easier to get a hotel room with a credit card than it is with a debit or a cash alternative card. Things like paying for parking, any sort of offline payment device like a parking meter at an airport usually needs a real credit card. Just keep that in mind. There is a few spots out there that debit cards won't work no matter how bad you want them to. So use that credit card if you want to accumulate some points. You can pay the balance off every month. It's a great way to get some free flights and some little benefits make you feel a little bit special. With that, I appreciate you watching the video. Like, comment, subscribe, share it with a friend if you enjoyed it and you want to share this knowledge with them. And as always, we'll see you in the next one.